All right. Ready to dive into some interesting financial waters today.
Always.
We're going to be looking at General Mills's second quarter report for fiscal year 2025.
Okay.
Their Form 10Q. We're not just going to be looking at the numbers, though.
Right.
Our mission today is to really figure out what this report can tell us about the food industry as a whole,
Yeah.
and maybe even like how we're spending our money these days,
Right.
with everything going on.
Yeah, for sure. Looking at this report, the thing that really jumps out at me is this sort of paradox.
Okay.
General Mills posted a 2% increase in net sales, which is pretty decent, but then you see their operating profit. It's up 33% compared to last year.
Whoa.
Yeah. It makes you wonder what's really going on.
Yeah, that is a big jump. So I guess not all profit is created equal.
You got it. There's definitely more to the story here.
Okay, so what are we missing?
Well, a big chunk of that profit increase is actually due to something that happened last year. Remember that goodwill impairment charge?
Oh, right. The one related to their Latin American business.
Exactly. That's making the year-over-year comparison a little wonky.
So how do we cut through all that and see how the business is really doing?
Well, that's where adjusted operating profit comes in.
Yeah.
It helps smooth out those one-time accounting things
Ah, okay.
and gives us a clearer picture. In this case, adjusted operating profit shows a 7% increase.
Which is still good.
Yeah, still solid growth
Yeah,
and probably a more realistic view of things.
gotcha. Always got to look beyond the headlines. Now, something I always find a little confusing is this idea of organic growth.
Yeah.
What does that even mean for a company like General Mills?
Well, organic net sales growth is super important for companies like General Mills
Okay.
because it isolates how their existing business is doing. Imagine you're measuring how much a tree has grown.
Okay, yeah.
You wouldn't count the growth from branch you just grafted on it.
Right, that makes sense.
So we're taking away the impact of acquisitions and currency changes and just looking at the original business.
Gotcha. So how did the original tree do this quarter?
Well, they achieved 1% organic growth.
Okay.
What's interesting is that their volume actually went up.
Oh, so they sold more products overall.
Yep. But it was partly offset by something called price mix.
Okay, so what is price mix? Does that mean they had to have big discounts? Or are they just selling more of their cheaper products?
It could be either of those
Yeah.
things, or even a combination. Price mix basically reflects the average price of what they sold and the types of products.
Okay.
So yeah, maybe they had lower prices to compete. Or maybe they're selling more of their lower margin items because people are watching their spending.
Interesting. So maybe a little bit of a yellow flag, but not a red flag yet.
Right.
We got to remember that General Mills is a big company, lots of different parts.
Oh, yeah.
So let's break it down into those four main segments they have. North America Retail, International, North America Pet, and then North America Food Service.
Sounds good.
Starting with North America Retail, which I think is still their biggest segment.
Yeah, definitely.
We see flat sales for the quarter. Not bad, but not great either.
True.
But their North America Food Service segment, like schools and restaurants,
Mm-hmm.
saw sales jump by 8%.
Now that's more like it.
Right. So is this a sign that people are over the pandemic and going out to eat more?
It could be. More people eating out definitely means more demand for their products in those places.
Yeah. But then on the other hand, their international segment is having a rough time.
Yeah, it is. Operating profit is down 31%.
Ouch, that's a big drop. Is that because those international markets are being hit harder by global economic stuff?
Probably. There's a lot of uncertainty in the global economy right now, and it can definitely make people think twice about spending money, especially on things like packaged foods.
Makes sense. So some mixed signals from the international market. But hey, there's a bright spot. And a furry one at that.
Oh, yeah.
Pet food. It seems to be doing really well for General Mills. Their North America pet segment had a 5% sales increase.
I'm not surprised. And what's interesting is that it seems to be driven by premium pet food brands.
Really?
Yeah. It seems people are willing to spend more on their pets, even when they're cutting back in other areas. It makes you think about what people really value.
For sure. Okay, so we have flat retail sales, struggling international markets, and booming pet food. But that's not even all, right?
Nope.
General Mills is also making some big moves with their portfolio. We can't ignore the yogurt situation.
Ah, yes. The yogurt are selling off their North American yogurt business.
They are for a hefty $2.1 billion.
Wow. And at the same time, they're buying a pet food company.
Exactly. Whitebridge Pet Brands for $1.4 billion. I think these moves tell us a lot about where General Mills thinks the food industry is going.
Yeah. So is yogurt on the way out? Is it not the breakfast staple it used to be. Well, it's hard to say for sure. But this move definitely suggests that General Mills might be seeing slower growth in yogurt. And the pet food acquisition. Maybe that's them betting on something more resilient, even during a recession. People will cut back on themselves before they cut back on their pets.
Interesting. Okay, so before we get into all the strategic stuff, let's take a quick look at General Mills' overall financial health.
Good idea.
What's the diagnosis?
Well, from their balance sheet and cash flow statement, they seem to be in pretty good shape. Plenty of cash on hand, good access to credit,
Okay.
and they actually spent $600 million buying back their own stock.
That's a pretty big vote of confidence in their future, right?
It definitely is. But here's where it gets interesting. Tucked away in a footnote, there's something curious. An impairment charge related to the Uncle Toby's brand.
Wait, hold on. Impairment charge. Can you explain that for those of us who don't speak accounting?
Sure, it basically means they had to lower the book value of that brand.
Yeah.
Because they don't think it's worth as much as they thought it was.
So Uncle Toby's is in trouble.
Seems like it.
Is that just a temporary thing or is something bigger happening in the breakfast world?
That, my friend, is the million-dollar question. And that is exactly where we will pick things up in part 2 of our deep dive.
Stay tuned, everybody. We'll be back to figure out this Uncle Toby's dilemma and see what General Mills might have planned for the future.
Welcome back to our deep dive on General Mills. Last time, we were talking about the Uncle Toby's brand and why it's struggling.
Right. But before we jump into that, I'm curious about what General Mills themselves have to say about all of this.
Oh, yeah, good point.
They gotta have some thoughts on all this, right?
For sure. The management's discussion and analysis section in their report is always a goldmine. It gives us some color beyond just the numbers.
So what are they saying about the second quarter? Anything surprising?
Well, one thing that stands out is their emphasis on boosting organic net sales growth. That's clearly a top priority for them.
Makes sense considering their organic growth was only the same as last year. But they did say their product volume increased, right?
They did.
Yeah.
And that's what makes the whole price mix thing even more interesting.
Right.
They're selling more, but the value of those sales isn't growing as much as they'd like.
So are they having to lower prices or are they intentionally shifting to more value-focused products?
It's probably a bit of both. They do mention that the economy is tough for consumers right now.
Yeah, with inflation and all the talk about a recession.
Exactly. So they might be feeling pressure to keep prices down to stay competitive.
Makes sense.
But they're not just reacting to the market. They're also focusing on what they call remarkable experiences across their brands.
Remarkable experiences. What does that even mean? Like better recipes, healthier options, bigger discounts?
All of the above, really. They're really pushing taste, health, convenience, and value in their products and marketing. They want to give consumers what they want, even if everyone's on a tight budget.
So it's like those classic favorites, but updated, maybe some new stuff for specific diets, and definitely making sure things are affordable.
Exactly. And it's not just about the products themselves. They're also planning to amp up their brand marketing. Make sure their products are visible everywhere people shop.
Online, in stores, the whole 9 yards.
Exactly.
Yeah.
Covering all their bases.
Yeah.
General Mills has always been known for being pretty cost-conscious.
Oh, yeah.
Are they doing anything new on that front?
They're definitely sticking with their holistic margin management program. They're calling it HMM for short, I guess.
Catchy.
And they're expecting to save even more money in 2025.
So, like streamlining their supply chain, finding ways to make packaging cheaper, that sort of thing.
You got it. And the important thing is they're not just pocketing those savings. They're putting a lot of it back into the business, like boosting those brand building efforts we talked about.
Smart move. It's all about building that brand loyalty for the long haul.
For sure.
Yeah.
Especially since the food industry is super competitive.
Oh, yeah?
But General Mills does have some strong brands. Cheerios, Pillsbury, Betty Crocker, Haagen-Dazs. These are names people trust. True. Everyone loves a warm Pillsbury cinnamon roll.
Exactly.
Yeah.
But nostalgia alone won't cut it these days.
Right.
That's why this whole yogurt move is so interesting.
Right.
It shows they're willing to make big changes to keep up with what consumers want.
So speaking of yogurt, let's get back to that Uncle Toby's impairment charge. What do they have to say about that?
Well, they do give us some clues about why Uncle Toby's is struggling.
So is it more than just people switching to, like, overnight oats and smoothies for breakfast?
Yeah, those trends are definitely a factor, but it's not the whole story. They're also facing more competition in the cereal aisle. And of course, there are those rising costs for everything.
Right, like ingredients and packaging getting more expensive.
It's a tough combination for sure. And it raises the question, what's going to happen to Uncle Toby's?
Yeah, will they try to save it or just cut their losses?
It'll be interesting to see what they decide. This is what makes these deep dives so much fun.
I know, right? We're not just reading a report, we're trying to figure out the puzzle.
Exactly. It's like being financial detectives. We have their financials, what the management is saying, and what we know about the food industry. What else can we find out?
Well, their balance sheet shows they have a lot of cash on hand.
True.
That gives them a lot of options, right?
Yeah. They can make more acquisitions, invest in new things, or even just give money back to shareholders.
So maybe more moves like the pet food acquisition. Or maybe they'll double down on developing some really innovative products to tap into those new trends we talked about.
Absolutely. And don't forget about sustainability, which is becoming more and more important to consumers. General Mills has done a lot to reduce their environmental impact. I bet they'll be talking more about that going forward.
Yeah, appealing to those customers who want to support companies that are doing good.
Exactly. But we got to remember that General Mills isn't operating in a vacuum.
Right.
The food industry is always changing. They need to stay ahead of the curve to be successful.
Well, they've been around for a long time, over 150 years. They've clearly seen a lot of changes.
That's true. But what worked in the past doesn't guarantee future success. They need to keep innovating, adapt to what consumers want, and keep those costs under control.
Sounds like a tough job.
It is.
Well, that wraps up part 2 of our deep dive. We've talked about what the management is saying, looked at the Uncle Toby situation, and considered some of the trends that'll shape their strategy.
And there's still more to come. In part 3, we're going to dig into some of the finer points of their financials, risk management, their debt, and their overall outlook for the year.
Don't miss the exciting conclusion to our General Mills deep dive. Welcome back, deep divers. We're in the home stretch now of our General Mills exploration. We've covered a lot of ground so far, their financials, their strategies, what they're up against, and where they might be headed.
And in this final part, we get a little bit more technical. We're going to look at some of the less flashy but super important parts of their financial picture, things like risk management and debt.
Okay. Because even the best plans can get messed up, right? Like, what about supply chain problems or prices of ingredients going crazy or even like weird weather? How does General Mills deal with all that?
That's a really good question. And it brings us to the whole world of risk management. Basically, how companies figure out and try to reduce the things that could hurt their business.
Okay.
General Mills uses a bunch of tools to do this, including something called derivatives.
Okay, derivatives. That's one of those words that makes my brain freeze up a little.
Yeah, they can seem complicated, but really, they're just contracts that get their value from something else. Think of them like insurance for the company, to protect them from big price swings.
So, like, are they using these insurance policies to protect themselves if the price of grain goes up? Or, like, energy costs?
Exactly. They're using them to manage those risks for key ingredients like grains, oils, dairy, that kind of thing, and also for their energy costs. It helps them smooth things out and plan better financially.
Makes sense. So it's like hedging their bets,
Yeah.
right? Making sure one bad thing doesn't sink the whole ship.
Yep, that's a good way to put it.
Yeah.
They also do more traditional things, like having long-term contracts with their suppliers and planning their purchases carefully.
Okay, so liking in prices and making sure they have what they need.
Right. It's a multi-pronged approach, you could say.
So derivatives and good old-fashioned planning.
Exactly.
Yeah.
Okay, ready to switch gears a bit?
Sure.
Let's talk about debt. They've been doing a lot in the debt markets lately, issuing new bonds, buying back some of their existing debt.
Yeah, debt is a tricky one. It can help a company grow, but it also comes with interest payments. And eventually, you got to pay it all back. What do you make of their debt situation?
It's all about finding the right balance, like most things in finance. Their balance sheet shows they do have a decent chunk of long-term debt,
Okay.
but they also have a lot of cash and can easily borrow more if they need to.
So it's not necessarily a bad thing, as long as they're being smart about it.
Right. And it looks like they are. They have a mix of different types of debt, some with fixed rates, some with floating rates. Helps them manage the risk of interest rates changing.
Okay.
They've also been refinancing some of their debt, taking advantage of lower interest rates when they can.
That's smart.
Yeah, definitely a sign of good financial management.
Okay, so as we wrap up, let's look ahead a bit. What's General Mills saying about the rest of the year?
They haven't given specific numbers, but they have mentioned a few things that are likely to be important.
Like what?
Well, the global economy is still a bit shaky. Inflation is still a concern. And there's talk of a possible recession in some places. So that's something they'll have to watch closely.
Yeah, tough to predict what's going to happen there. But what about things they can control? What are they doing to keep growing and making money?
They're really sticking with those remarkable experiences we talked about,
Yeah.
focusing on taste, health, convenience, and value.
Gotcha.
So we can expect more new products and creative marketing campaigns.
Right, because they need to keep up with what people want, especially if things get rough economically.
Exactly. And they'll need to keep a close eye on those costs, too, using that HMM program. Finding ways to be more efficient and make up for those higher ingredient prices.
Sounds like they need to walk a tightrope.
Yeah, it is a bit of a balancing act.
Well, they've been around for a long time. They've probably seen it all.
True, but the past doesn't guarantee the future. They'll need to keep innovating and adapting to stay ahead.
And that's what makes it so interesting, right?
Absolutely.
Okay, folks, that brings us to the end of our General Mills deep dive. We've taken a close look at their performance, analyzed their decisions, and even tried to predict the future.
And remember, this is just a snapshot in time. The food industry is constantly changing, and so is General Mills.
But the great thing about the deep dive is that we've given you the tools to stay informed, analyze companies, and understand the business world better. Now go out there and be smart consumers, investors, and engaged citizens.
Until next time, happy deep diving.